What's up, guys? Good morning. Happy Easter. Happy April. We're going to go through a few markets here and give you kind of a broader context, a weekly outlook of some of the major markets here that I trade or that I look at, and most of them that I trade. So here's the S&P 500. The month just closed, so we're going to give you a perspective on that. We've got another bullish month that closed through February's high pretty aggressively. You can see a little bit of compression in the candles, but for all intents and purposes, it's full steam ahead. From the bullish perspective, week still straight up. We had an inside week last week that just operated within that Fed week, or last week, which was the Fed week, or 2 weeks ago, which was the Fed week. I'm sorry. Right here was the Fed week. Last week operated within that week, so we had an inside week. Watch for that break to the upside there, and you can see on the daily here, just a straight up channel. You can see the channel here to the upside, to the downside. We got some overnight action that has wicked up and is kind of chopping around, oscillating at the top of last week's activity so far. We pushed through this all-time high, or wicked through it so far. So I would watch for a break, the cash session break on the daily to the upside or to the downside. Let's go over to the Nasdaq, where the story is a little bit different. The month was a lot weaker for the Nasdaq. You had the month barely. You can see the compression in the candle. We did get a close that was through the top of February, but it was very thin. This is almost a doji candle, very thin body with wicks on both sides. And now we're operating within, so far, obviously the morning session, but we have not pierced the top or bottom yet. Last week was a inside week as well to the downside. On the ES, you had that inside week to the green. This one on the Nasdaq was to the downside. Failed to take out this range high here. We seem to be sitting in a little bit of a shelf here that you can see right through here for the last few weeks. We'll just go right to about there. We're sitting right in this chop range. Thought we were going to get a rotation on these two back-to-back weeks. The Fed had other ideas. We hit this EMA cloud right in the middle to the tick or to the T, and then roared from there. Now we're on the upside, failing to break out into new highs as of last week, and still are operating within that last week. On the daily, you can see the rejection at the top of this zone right here. So I'd watch for a break up here. I would watch for continued weakness to the up here and maybe a potential rotation back around. But I would continue to watch these rejection wicks here and see if they hold. Unless that changes, my guess is we're gonna take out Thursday's low here at some point and rotate back down to the bottom of this channel unless we bust out to the top side. All right, let's go to the small caps. Monthly, we got a nice decent close above February. On the weekly, we had a nice bullish run last week. On the everybody else was an inside week where the small caps were rolling a little bit. On the daily, you can see this trend moving up. You got this, if you zoom out on the Russell and you go back any kind of distance, hold on, let's go to the continuous contract on the RTY. All right, let me just hold on. Okay, so if we go to the continuous contract, the Russell, for all intents and purposes, has been sitting in this channel for the last 2 years, since the beginning of 22 until it just busted out of there at the beginning of this year and is now starting to move to the upside to attack some of these highs up here. We just took out this little swing high up here, and now on to the next one. Got a little bit of a volume shelf up here. As you can see, this thing just kind of moves in consolidation bands with a little bit of or has been stuck in this broad consolidation band from all the way back to 2021 until we rallied up here, dipped, consolidation band, and now we seem to be rotating back up to the top on the small caps. And you can see heavy rejection at the top of the last couple of days. The weeklies ripped through. We had a bullish week last week, so we'd look for that to continue on to the upside this week unless that changes. All right, let's go to crude. Crude on the monthly, a nice push, a nice hard shove above from 80.13, the high of February, to 83.39. So you can see there's some pretty tight consolidation range on crude over the last couple of years, since at least the beginning of 20 or the mid of 22. Kind of been in this the high of 93 down to 64, about a $30 range, which is pretty wild if you think where oil has been over the last like 4 or 5 years. I know we had that big dip in COVID, but for the most part, oil has been sideways. Okay, but we are on a little bit of a bullish run here. A nice hard close above February last week. Had some rejection 2 weeks ago, and then it rallied back up. It looks like we're going to peak above here. Check out the landscape above 83 and potentially move on up to 84. But it looks like we're on this bullish run up here to take out some of these highs on these other weekly candles. Okay, on the daily, big bullish day to close out last week, and now we're just hanging out up top. Maybe a little bit of a pullbacks in store today, down to that 81.74, all the way even potentially down to there, to kind of fill in some of this bullish run gap from Thursday, close of the business. I think it was Thursday. Yeah, Thursday, since the markets weren't open. All right, let's go to the dollar. I guess to finalize that thought, a bullish run here on crude to try to take out some more of these tops, unless there's a violent retrace back down. But in the immediate, there's probably going to be a little bit of a pullback before we rally up and go again. As you can see, that there's this channel right through here that we're progressing up on. Okay, let's go to the dollar here first. So the dollar, very bullish candle here. Actually, we did not get a close through the top of February. We had a nice retracement, a big retracement to start off March, and now we have a momentous bullish candle, a hammer candle. It's a green candle with some momentum to the top side. The last couple of weeks have been very bullish. Bullish close above, and now we're stalling out a little bit, but I would wait for a break of this 104.95. But we're going to probably end up filling in this monthly gap, I think is what it wants to do. It's been open for quite some time, and last week, in the last couple of weeks, they made a run to the upside here. So let's look for that break of the upside of last month, the break of the top of last month. We'll probably likely fill in this monthly gap to the top here. That's kind of my estimation. You can see in the last couple of weeks, we've had nothing but a run up, and I don't see, other than like right here, 104, call it 105 area, there's going to be a little bit of resistance, but through the rest of this should be pretty smooth sailing. So now that brings me over to the euro, which is a perfect negative correlation to the almost perfect negative correlation, I should say, to the dollar. Okay, so we don't quite have that gap. We have a lot of open space here, I would say, that doesn't have a lot of body, a lot of uncertainty happening right here. Since the dollar has that gap there, though, I would probably feel comfortable in saying that this gap right through here to the downside is probably, if we're truly going to move down on the euro, which I think is the likely conclusion. If the dollar's going up, the euro is likely going down. You've got this volume shelf sitting right up here. that we'd have to fight through. Heavy rejection through that volume shelf for the last essentially 2-3 months, right through here, here, and here. And you can see we're in this on the weekly. Never mind the colors on there, but you can see that we are in this consolidation band, this wedging formation that's taking place right through here. I'd watch for a break to the downside. If you're a euro trader, I would watch for a volume-based shove to that downside to fill this gap and potentially break down and cover the rest of these lows on these monthly candles over the course of time. And we are on a bearish run now, so you can mark off. I mean, we're hovering right at the month lows. I would even feel comfortable in marking these off right here. Let's see. Put that in red. That's your prior month low. And so when you cross through that on the weekly, on the daily, you're really close to it at the moment, actually. Hold on. I got to true that up a little bit. I didn't have my magnet on. There we go. All right. So there it is. Watch for a breakdown of this 80-40 level here is what I would be looking for. Okay, let's flip through. Okay, so this is very, very bearish. Sideways chop to bearish is where I would place the euro, just based on where the dollar's at. All right, let's go to the S&P 500. I've got some analysis pre-work done on here for some levels. So I'm going to put on the weekly charts, the weekly volume profile charts, and the TPO, and I kind of just want you to take a look at the levels that I've got set. Where you got your all-time high right here. I don't have any of the candles on it. I took those off, but I'll walk you through the level. I've got Fibonacci extensions all the way to the upside, up here to 53.8775, and that's based on this swing low to here. So I thought that would be a fitting swing low to swing high up here. We've got all-time highs. We've got prior week high right through here. We've got our new week open, which is right here at this little notch right there. Prior week value area high. We've got a little thin print right in here in pink. Okay. Prior week's POC. That's where the most volume last week went off at 52.85. That was a pretty solid level all week last week, if you recall. And then we've got that prior week value area low here. And then we've got prior week low right here. So you got your week high, your week low, and then you've got some value area right in here. And watch for a retrace of that as the week opens up just above, and we're building a little bit of value up top here. I'd watch for a pullback to the downside here to kind of fill in some of these thin prints, and maybe potentially touch or retest this massive thin print right here from the prior week's double or capital B double distribution that we ripped right through here on the Fed week. And I got some more levels to the downside from 2 weeks ago. If we break down below here, those become relevant, but we're not quite there yet. Let's flip over to the Nasdaq, and we'll do the same exercise there. And get rid of the daily. Okay, so now we're back to our weekly profiles here. Okay, and there you've got your levels set to operate from. And current price is sitting right here, prior day high. Oh no, I'm sorry. Yeah, that's correct. Current price is sitting right here at prior day high. So we're going to watch for a cash session break to the upside. Okay. Or a cash session break down below the open here if we start to break down below. And then this week was very tight inside, so the inside we want to look for a break to the upside, break to the downside. That's about it. That's going to get you covered for the two ES and the NQ with some high probability data-driven levels. That's kind of how you do it. All right. Good luck out there. Happy trading. If you missed my series on volume profiling, go ahead and check it out on my page. Like and subscribe below. We'll see you there.